Happy Tuesday, everyone. Stephen Mead here with Domicile real estate for people who love houses. Welcome to another edition of our SoCal housing market update. It is November, I can't believe it, November 10th, 2020. And once again, for those joining us, for us, our statistics are run based on Orange and Los Angeles counties here in Southern California. This is also kind of the first full week of a new month. So we actually have some sort of like monthly statistics that I wanted to go over briefly with you guys. And, just a little bit of a preface. I think 2020 has really been different than any other year in real estate. And, I think this fall is really sort of proving that out even further. If you'd asked me to predict a month ago where we were going to be right now, I probably wouldn't have predicted this exact scenario. And, that kind of reminds me too, I will offer sort of ideas and projections, but the reality is the point of this is to tell you the way things are, right? To give you the most up-to-date information of how things are right now so that you can make the best decisions possible for you and your family. Anyhow, without further ado, let me open up our stats. Our first slide is comparing our first week of the month sales between 2019 and 2020. And I love this graph because this really sort of encapsulates 2020 and kind of the story of 2020. If you look here, January 2020 was a little bit better here in red. February 2020 was a lot better than 2019. March, a little bit better. And then, we had April, May, June, and July, greatly reduced sales numbers in there. But what's interesting is by August, things had actually evened out. By September, they were a little bit higher. And October, they were a bit higher. So, this is kind of an interesting year in the sense that it's definitely a better year than 2019. We were already on pace to do better than 2019 before COVID. And of course, the low interest rates, I think, are really the driver of this sort of amazing kind of recovery in sales. When you look at this, really just an amazing recovery. 2019 was also unusual in the sense that if you look here, sales took a dive in September and they recovered in October. That is actually unusual, and it is not so much typical for our market. Anyhow, if we're moving on to kind of our statistics for this week, that I like to really run through supply, demand, and what I think that really means if you're a person out on the street. And when I say a person on the street, this information is really applicable, whether you're a buyer or a seller. If you're a buyer, this is really the information you need to know going into multiple bidding scenarios, right? This is the information you need to know when you're trying to make those decisions on, should I buy what's out there right now? Should I wait? What should I do? And if you're a seller, this gives you a lot of information about pricing and maybe what you can expect in the marketplace. So jumping into our supply and demand, let me jump to those real quick. So this is kind of an interesting chart. And the reason why this is interesting is if you follow our arc, right? Pre-stay at home, lots of new listings. And so this chart is saying how many new listings came onto the market. This one is under 1 million. This is $1 to $2 million. And these are just new listings put in the MLS. And you see this arc through the summer. Then kind of it falls down here. And we saw that our new listings actually dropped again, right? And one of the things that I've kind of learned is that when there's holidays and when there's events, the sellers are actually a lot more likely to pull off the market and move a little bit slower than the buyers who, especially in a tight market, the buyers will stay in because they know they need to buy a house. So if you see, we kind of dropped off on new listings. And if you look at our $1 to $2 million category, sort of the same thing, rebounded a little bit. So this market has kind of settled into a little bit more of a new normal, whereas this is definitely following an arc here. And one of the things we notice is in the properties priced under $1 million, a lot of times you have people that don't want to move around the holidays. So we're entering that zone where they don't want to be inconvenienced with showing their house, having people walk through their house. And if we compare to last year, we're actually really right on pace for new listings. 1570 last year, 1577 this past week. Those numbers are almost identical. They are within half a percentage point of each other. But if this is the supply side of the equation, now we look at the demand. Well, demand is kind of interesting, right? Because if we look here in our under $1 million category, well, things dropped, but they actually rebounded slightly and they're kind of holding in a new pattern and they dropped a little bit less. And the reason why there's an important distinction is that means that the new listings went down, but the new escrows went up. And if we look and compare to last year, we see something really interesting. So, new listings, we go back two graphs, new listings almost identical as last year. New escrows, now we're up. We're actually up about 2% versus last year. So, normally these don't move in opposite directions. And when they do, it's an indication that the market is changing. And if we look at our absorption rate, that really sort of tells the story of what's happening. Absorption rate is the ratio of new listings that came on and new escrows that happened this week. By a new escrow, we mean that means somebody negotiated a contract to buy a house this week. So if we look here, this absorption rate is close to 90%. And 90% really is our mark for what we call a hyper competitive market. And hyper competitive means tons of bids, generally prices are rising, or there is at least a substantial amount of upward pressure on price. People are agreeing to terms that maybe they wouldn't agree to in another market, like very short inspection periods. So we are definitely in what I call a hyper competitive market, especially under $1 million. Things look a little bit easier if you go to our $1 to $2 million market. And what's interesting is $1 to $2 million markets had some pretty high periods in the past over the summer, but they've really kind of settled into these numbers that are much lower. It means that this $1 to $2 million price category is much easier to buy a home in, much simpler, much less competition. And if you look here at our average pending list price, for the longest time, we showed this arc that went up and then it just kind of leveled out, right? Like through the summer, it kind of reached a point and it stopped. It just didn't go any further. And, there was even some talk that maybe it was getting a little soft over here. Well, now we've had a few consecutive weeks, and the number that didn't print out is this is 650 this week. And so, just as a little bit of an aside, if you're trying to look at what's happening in the market this exact week, sold data is not going to do it for you. And the reason why sold data is not going to do it for you is because sold data is based on contracts that were negotiated 30 to 45 days ago. So what were the statistics that we use, and it's not perfect, is we use what's called pending price data. Now, we don't know what price a home might be in escrow for, but what we can look is we can look at which homes went into escrow and what were their list prices when they went into escrow. So we don't know the contract price, but we know what their list price was. And that gives us a little bit of an approximation. If we go back to this chart, and we look at it again, it's been holding steady, but it's spiked. 650 is a new high. And I will tell you, prices are definitely higher than they are in our under $1 million range. Let me get out my pointer here again. Prices are definitely higher overall than they were a month ago. I think if you ask any agent who's working with buyers in the street, they will tell you the same thing. And that's really what the data points to, is that in the past month or so, we've really started to see things start to climb back up again. Now, if we look at our list to close ratio, this is kind of like another little bit of a corroborating detail that shows what direction our price is heading. And when prices are heading up, sellers tend to be behind the time. So just as a little bit of an aside, one of the things we notice about consumers when we're in the real estate field is that consumers tend to operate on data in general that is about 30 days old. Now, all of you who are listening to this video, you probably don't fall under that category because you're listening to this instead, but most consumers work on a basis of being 30 to 60 days behind. So for example, if they see that their neighbor got $600,000 for their house, their initial thought is, I'm going to get 602, maybe I'll even get 610. But if they're not looking at the actual data, they might not know that the market is so hot, they could probably ask a little bit more and maybe even get it right now. So when we look at this list price versus closed price ratio, what it means is that on average, sellers actually underpriced their house by 1% on average. When we look at that whole under $1 million market, it means that in general, these houses are closing at higher than their list price. And this is again through Los Angeles and Orange counties. Now, if we look at our average pending list price in our $1 to $2 million category, this one we don't have as much sale data, so it's a little bit harder to plot this. Also, contract prices tend to vary a lot more from list prices in this $1 to $2 million category, so it tends to fluctuate around. But we're not seeing that same trend line starting to head upward in the last month. And I think we would see a little bit of an indication of that price, the prices in that range were moving. So if we move back to our days on market, I think this one is kind of unique and a little bit of a mystery. So normally when you see a price is increasing, you see days on market drop. But I think what's happening is I don't think days on market on average can drop much more than it was at. So we've seen a couple little spikes here. We are still under 30 days. That still means houses are flying off the shelves. But that's kind of an interesting spike given that we are seeing prices go up and we are actually seeing buyers buying at a rate, showing that they are basically eating up almost all the inventory that's coming on the market. If 10 new homes come on the market on average, 90% of those will be gone in the first week, which is kind of a real interesting statistic right now. Now, for our final chart, we're talking about affordability and our affordability index. And I think that might have a clue on why we're seeing some recent price jumps. So if we go ahead and we look at this number, this chart sort of plots over time relative mortgage payments. So we look at the median priced home in Orange County, which is single family and condos, and we look at the prevailing interest rate based on 20% down, and we came up with a baseline figure from June of 2018. And guess what? This past week, we were running just under 90%. And, something interesting happened in the past week, and that was actually that rates declined. However, if you are somebody who pays attention to the news, today is Tuesday. Was there some important news that came out on Monday that affected markets? There was. Pfizer announced that the vaccine may be ready within a month for limited use. This caused the stock market to rally, and it also caused the bond market to not rally, which means interest rates tend to go up. So our latest data does not incorporate that interest rate data because it just happened yesterday. So I expect that we're going to see that payment number might jump a little bit, and that might actually have a sort of an effect of stabilizing those prices out and stopping any gains. But we will just have to see the next week. As always, we love questions, comments. We're here to help. If you'd like to work with us, we'd like to work with you too. We work in Los Angeles and Orange counties for your real estate needs, buying and selling. We also have a separate video that we do that is just for first-time home buyers. That video comes out on Friday. So if you're watching us on YouTube, please like, subscribe, and hit that notification bell. I'm trying to think if there's anything else. Everybody, have a great week. Weather is changing. The market is too, but while the weather is cooling off, the market seems to be getting hotter. We will see you at our next video later on this week.